Hello friends, welcome to PKSR classes. I hope you guys are preparing well for your exams. Uh, Earlier I have posted the important questions video. I would like to clarify again that I have posted the questions from my workbook, okay? And all these questions are from ICA study material. So if you are my student, you already have the answers with you. If you're not my student, it's very simple. Just open your study material, you will find all the questions. Maybe the order will not be the same, but all the questions you will find eventually, okay? So that should not be a problem. That way you can get the help out of those important questions and prepare your examination accordingly, right? Anyways, the moment I have posted that video, in that I've announced that, I've told that this particular question is very important. The first question, which is about strategic profitability analysis of this particular chapter. That is a strategic SAO, strategic analysis of operating income. And many students have messaged me saying that, sir, this is a very complicated topic for us. We were not able to remember all these formulas. It is pretty cumbersome. So that is the reason I'm posting this video immediately. So I'll tell you one thing. No need to study any of this. Okay, whatever that has been given here in your ICA study matter, all this formula, this one, okay, this one, this one, this one, this one, and even this. Okay, that's okay. It's just a pro forma of reconciliation. Okay, you need not study any of this. Are you able to understand? I'll tell you why. Okay, we'll try to finish it off in a pretty simple way. Okay, right, chalo, now see here. See, the concept is pretty simple. Listen carefully. Any variance, okay, you take any variance, whether it is material variance or labor or sales or whatever it is, any item, any expenditure item or any income item, maximum it will have three angles. Maximum. The word that I've used is maximum, which means it can be two, it can be one as well. So there are only three possibilities. Either it will have one angle or two angles or max three. Okay, they are, one is growth perspective, or we can say three perspectives as well. Other one is price perspective, growth perspective, price perspective, and productivity perspective. You should remember all the different names for this. Productivity can also be called as efficiency. Productivity perspective can also be called as efficiency perspective. Price can also be called as price recovery. Are you able to understand? Growth can also be called as volume. Growth can also be called as volume perspective. Okay. Anyways, now having said that, now let's try to recollect all the variances that we know. Definitely it should fall under any of these three categories. That's the logic which I've told you, correct? So which means you take any variance, max it should have three, or it can have one or two or three, correct? Now let's go with all the variances that we know already. For example, let's start with material variance. Okay, now tell me. So first, material price variance, it falls under what? Price recovery. Let me call it as PR. This one, price recovery as PR, volume as V, productivity or efficiency as PD. Okay. Anyway, so material price variance is nothing but price recovery. So this is not a new variance. It's the same variance that we're going to call it with a different name. Are you able to understand? I'm just trying to make it very simple for you. What about material usage variance? It is productivity, or we can also call it as efficiency, correct? How efficiently you use your raw materials, isn't it? Next, come to labor variance. Labor rate variance is nothing but price recovery, right? Labor efficiency variance is nothing but productivity or efficiency, correct? Come to variable overheads. Variable overhead expenditure variance is nothing but price recovery. Variable overhead efficiency variance is nothing but productivity or efficiency. Got the point? Next, fixed overhead variance. Fixed overhead expenditure variance is nothing but price recovery again. And fixed overhead volume variance, name itself tells you that it is volume. Then come to sales variance. Sales price variance is nothing but price recovery, and sales volume variance is nothing but volume, or you can also call it as growth. Are you able to understand? Okay, so it's pretty simple. So it means what I've done here is that I've put all the variances which we already know, and I called it with a different name. That's all. The whole concept is that simple. So we are just gonna see it from a different angle, different perspective. That's all. They are not altogether new. But yes, there are certain new things that you have to remember. What is that? When it comes to material, what we have seen in our general variances, in our normal variances, or material price variance and material usage variance, correct? Whereas if you are solving any question from the perspective of these three variances. What are these three variances? Growth, volume, price or price recovery, or productivity and efficiency. Then even for material, there will be something called material growth variance. The moment you see this, you should not get terrified. Sir, what is this material growth variance? Sir, we haven't seen it so far. It's new for us. It's not new. Little bit of common sense. Growth is nothing but volume. So when I say material volume variance, change in volume is nothing but material volume variance. What is change in volume? Very simple. You take budgeted material cost and you reduce standard material cost. What is the difference between budgeted material cost and standard material cost? Volume. Are you able to understand? What is the difference between budgeted material cost and standard material cost? Volume. Budgeted material cost is nothing but budgeted material cost per unit into budgeted output. Standard material cost is nothing but budgeted material cost per unit into actual output. If you take the budgeted raw material cost per unit, you multiply that with budgeted output, it will give you budgeted material cost. You take the same budgeted material cost per unit, you multiply that with actual output, it becomes standard. So to put it very simple, the difference is volume, which is nothing but growth variance. Same logic applies to labor also. Suddenly you see and you need to calculate something called labor growth variance. Okay, don't get terrified. Same logic. It is the difference between budgeted labor cost and standard labor cost, isn't it? Again, the logic remains the same. Budgeted labor cost means what? Budgeted labor cost per unit into budgeted output. Standard labor cost means what? Budgeted labor cost per unit into actual output. So the labor cost per unit remains the same, which is budget in both the cases. You multiply that with budgeted output, it becomes total budgeted labor cost. You multiply with actual output, it becomes standard labor cost. Same logic applies to variable overheads as well, which is nothing but we can call it as variable overheads growth variance or variable overheads volume variance. That's it. The entire concept is done. Whatever that has been given in your ICA in those initial pages, the entire concept is done. We have covered everything now. So which means except these three variances, all the other variances are something that we already know, something that we have already learned in our standard costing chapter. Are you able to understand? So material price variance is nothing but price recovery. Material usage variance is nothing but productivity and efficiency. Labor rate variance is nothing but price recovery. Labor efficiency variance is nothing but productivity or efficiency. Variable overhead expenditure variance is nothing but price recovery. Variable overhead efficiency is nothing but productivity or efficiency. Fixed overhead expenditure variance is nothing but price recovery. Sales price variance is nothing but price recovery, and sales volume variance is nothing but volume or growth. And of course, in addition to the existing variances which we already know, there are three new variances, that is material growth, labor growth, and variable overheads growth variance. How to calculate that I told you, which is nothing but difference between budgeted cost and standard cost. There ends the matter. If it is material, budgeted material cost and standard material cost. If it is labor, budgeted labor cost and standard labor cost. If it is variable overheads, budgeted variable overhead cost and standard variable overhead cost. That's it. So if you know this, your entire strategic profitability analysis concept is done. That's all. That's it. Are you able to understand? So here in all these formula, you already know the existing formulas, right? Use the same formula, that's it. And only new things that you're going to learn is only these three. For that also I just told you the concept. No need to remember any formula. It is a difference between budgeted cost and standard cost. There ends the matter, that's all. For this you already remember the formula, so you need not learn anything new once you know the standard costing, isn't it? Whichever the methodology you would have followed. Are you able to understand? Right? It doesn't matter, because you know the answers for all these variances. That's it. We are done with it. So we can solve this particular sum. Now see, what is this question? Y Limited is a manufacturer of cardboard boxes. An analysis of its operating income between 2020 and 2021 shows the following. You got the income statement, then growth component, price recovery component, and productivity component, and you have got income statement. So this is the pro forma of how reconciliation statement looks like if you are calculating variances from these three perspectives, that is growth, price recovery, and productivity. So you got revenue, you got cost, and you got operating income, and they've got reconciled. I told you here itself that any variance, okay, maximum they'll have these three angles if you see them from these three perspectives: growth angle, price angle, productivity angle. Are you able to get me? That's what he has given in this particular question as well. So what is that he's trying to ask? Already he has done the reconciliation. He's again asking you that Y Limited has sold 4 lakh boxes and 4,20,000 boxes in 2020 and 2021. During 2021, the market for cardboard boxes grew 3% in terms of number of units, and all other changes are due to company's differentiation strategy and productivity. Fine. What is that he's asking you? Compute how much of a change in operating income from 2021, from 2020 to 2021 is due to industry market size, productivity, and product differentiation. Right. Already he has done reconciliation of but 2020 income with 2021 income with the help of three things: growth component, price recovery component, and productivity component. Now he is asking you to do the same reconciliation of income of 2020, which is 10,80,000, with income of 2021, which is 14,42,000, not with the help of these three, which is growth, price recovery, and productivity, because that has been given in the question, but with the help of these three: market size, productivity, and product differentiation, which means this should be replaced with market size, right? Productivity will remain productivity only. In the place of price recovery, we'll be getting what? Product differentiation. So one is market size, other one is product differentiation. Productivity remains the same. So which means basically we'll copy paste the same number, isn't it? So how to start the answer? Very simple. You just put this pro forma, operating income of 2020, copy paste from the question, leave some 3 lines. Operating income of 2021, copy paste from the question. Then here in the 3 lines, what you have to put? Market size factor will be 1 line, productivity will be another line, product differentiation will be another line. Productivity you already know because that is there in the question, 58,000. You put that 58,000 here, copy paste that, there ends the matter. Now we need to fill it up only two, the rest two. One is market size, the other one is product differentiation. Now that is also very easy once you know the logic. If you can see here, he said market size has grown by 3% in 2021 when compared to 2020, correct? So 2020 is how much? 4 lakhs, right? 4 lakhs into, it has got increased by how much? 3%, which means 12,000 units has got increased because of market size, correct? Here, if you can see, there is growth component that is given in the question. Growth means what? Volume. Growth means what? Volume. Total volume variance is how much? 1,40,000. How much is the change in volume? 4 lakhs to 4,20,000, which means totally 20,000 units has got increased, and for that the variance is how much? 1,40,000. That is a volume change. In that 20,000, 12,000 is due to whom? Market size. So therefore, market size variance will be how much? Take proportionate. 1,40,000 is for 20,000 units. Then for 12,000 units, it is how much? 1,40,000 into 12,000 divided by 20,000, correct? So 1,40,000 into 12,000 divided by 20,000. 84,000 will be your market size. Done. Now this can be put as balancing figure also. Your answer will be fine, but you will not get marks because we have to show the working, right? So market size is done. So now tell me one thing, use your common sense. Sir, totally the volume has got increased by 20,000, sir, from 4 lakhs to 4,20,000. In the 20,000 increase in volume, 12,000 is due to market size. What about balance 8,000? That has got increased because of what? Very simple. What should be the only factor? What should be the only factor? Market size is done, productivity is done. What should be the only reason? Product differentiation. Like that also you can analyze, or when you read the question itself, if you are smart enough, you should observe this number carefully. What is that? Revenue has got increased, favorable, which means you have sold at a higher price. Cost also has got increased. Ultimately, the net effect is favorable, which means you have invested in cost to make the product different, and because you have made the product different, you are able to sell it at a higher price. And because you have made the product different, not only you were able to sell it at a higher price, but also you were able to sell more number of units. Are you able to understand? So when you have seen this, you should be able to get that logic, which means your total sales has got increased by 20,000. In this, 12,000 you were able to sell extra because of increase in market size, which is uncontrollable reason, which is not anything special. We haven't done anything special as a company. It's a natural thing outside our control which has happened. Market size has got increased, our sales also has got increased. How much? To the extent of 12,000. But the balance 8,000 is due to making your product different. Therefore, people has bought your product. So which means what will be your calculation? Same 1,40,000 into now 8,000 units divided by 20,000 units. So 1,40,000 into 8,000 divided by 20,000. 56,000. This will come under which one? Already we are done with 2. Market size is done, which is 84,000. Productivity is done, copy paste, which is 58,000. So what is left over? Product differentiation. Under that, this 56,000 will come. In addition to that, this price recovery component is there, right? Which is 1,64,000. You were able to sell at a higher price. Why? Because of product differentiation. You made the product different. That's why you were able to sell at a higher price, which means 1,64,000 also will come under product differentiation only. Totally 1,64,000 plus 56. 1,64,000 plus 56,000, 2,20,000. Answer is done. That's it. You see, it's very simple. So only thing that you guys need to remember is that just remember this particular concept. Any variance will have maximum 3 angles. So when you try to think about any expenditure, you try to think this expenditure, will it change because of change in growth? Will it change because of change in price recovery? Will it change because of change in efficiency? Like that you keep on thinking, then you'll understand, okay, with respect to that particular expenditure item or income item, whether we'll have all the 3 variances or we'll have any 2, okay, any 2 it can be, or we'll have only one, either this or this or this. Are you able to understand? So once you know that, you know what are all the variances you need to calculate, because all these are the normal variances which we already know, except that now we are calling it with a different name. And these 3 are the only new variances that you have to take care of it. And then for that particular problem, the reconciliation has to be prepared in this particular pro forma in case if that particular problem comes in the examination. Are you able to get me? So that's it from my side. I hope this particular video has helped you guys and saved at least half an hour to 45 minutes such that you don't study all this formula and by heart all those things. Not necessary. Okay, just follow what I've told you in this video. You should be good to go. Thank you so much, guys. If you really love this video and the efforts, please like, share so that many students will get benefited. And all the best for your exams, guys. Thank you.